Mr. Castrovillari, almost all asset classes have ended in the red at the end of 2018. What were some of the reactions of your clients?
Clearly, it has been a challenging year last year, especially the fourth quarter. However, happy to see that Q1 has started well in 2019. And going forward, although we think markets may remain volatile, if you look at some of the pressures from the political side, from the trade conflicts, we think that we should be in a good spot. Clearly, we do expect the cycle to continue. If you look at the US economy, we think GDP will slow down, but not massively, from about 3% to 2.5%. We think that some of the, most of the global economies will converge. Even China, we think, is going to be helped and will be doing well. If you look at our asset allocation, our overweights, underweights, we do believe that in the fixed income market, governments may probably underperform compared to corporates. We do like emerging market debt and high yield. Opportunistically, we think spreads have come out, are more attractive. On the equity side, we do favor the US equity market. It may bring, in fact, some maybe lower earnings, but the valuations have adjusted well. And also emerging market equities may bring some value as well.
Still, the insecurity in the market is still, you can almost grab it. And a lot of clients were really confused about the market conditions, about the political situation, geopolitical insecurity, and so on. How do you deal with that in face of your clients?
It's a very good point. Our focus is really client-centric. So we focus on delivering our clients' objectives. What does it mean? It means, of course, delivering performance. We do everything we can to meet the client objectives, but also transparency as well as communication. Our portfolio managers are based typically in the US, in Asia, in Europe. They travel to Switzerland typically once a week. We have multiple interaction. Really important to be close to the client, be transparent, and show what we're doing from a long-term perspective, but also maybe try to catch some opportunistic element as well.
Passive and indexing investments have been the largest trend of the past few years, but active asset managers always said once the markets would turn, clients would turn again back to active asset management. Is that the case?
Yeah, I think so. We are an active manager, clearly. That's what our 80-year legacy brings to the table. We're very research focused on what we do. We have very much of a bottom-up focus as well. We don't do passive strategies. I think there is a place in client portfolio. But I think clearly, as you pointed out, we do expect opportunities. In those areas I mentioned before, where we have a strong expertise in high yield, in loans, in emerging market debt across the globe, we think can really differentiate yourself from indices. The other area where we think we've seen obviously strong client interest and there is an important angle for active management is in private markets, whether it's private debt or in private equity, where returns have been actually very strong compared to public equity, and there are good opportunities also going forward. It's key to have an active approach, whether you pick companies or whether you pick managers for your clients.
Neuberger Berman has its origins at Lehman Brothers and is present in Switzerland as a standalone firm since 2009. What were some of the larger trends in those past 10 years?
We've been really blessed and privileged by seeing a lot of client activity from our client. What we have detected and seen are two or three main trends. One is the appetite, the interest for yield. However, though in a very risk-adjusted, controlled way, also looking at cost. So the areas I mentioned before in fixed income are a clear testament of what clients do, they need, and what we are very active in. Emerging market and high yield, for instance. Big focus on transparency and cost. The other end of the equation is much more on the illiquid side. Clients who are okay to lock up their capital for many years. They do expect, of course, again, transparency and performance, alpha, I would say. But they've been very active around private debt and private equity. And we expect them to do so going forward.
How has Neuberger Berman in Switzerland developed as a firm in terms of asset management, assets under management?
Absolutely. If you look at some of the metrics, specifically the number of our clients in the last 10 years, as well as the number of employees here in the Zurich office, but also the number of strategies and the AUM, we have grown by 4 times. And that really has been due, thanks to our long-standing presence. Many of us have been working in the industry for over 20 years. As a team, as a core client team, we've been at the firm for 12 years. And I think that helps understanding the client need and be there in good and maybe less good time, more difficult, challenging times. But we're very pleased with the activity we've been witnessing and seeing across the 3 regions, and also from the institutional and from the intermediary side, private banks specifically, and the rest.
You mentioned that you and your employees, you are investors in your own company. How does this play out in front of the clients? Is that a proposal for the clients?
So I think it is. It's what we believe in, i.e. on one hand the company has 2,000 employees worldwide. It's owned by 500 of us, 500 partners, so alignment of interest on that front. And as you pointed out, we do invest always along our clients, whether it's in equities, in alternatives, or in fixed income. We think it's really important to be aligned with your clients, understand the issues, the opportunities, and be there in the long run.
Mr. Castrovillari, thank you very much.
Thank you.